The question here arises is that Sarah maintains one combined account for rates and insurance. On 1 August 2017, 2 months rates $800 were outstanding. So 2 months rates were outstanding and 3 months insurance $570 was prepaid. And the following payments have been made during the month 5200 and 3400. On 31st July 2018, it was found that $1,000 for the insurance paid on 1 November related to her private house. Okay, so anything related to proprietor's private expense is termed as drawings, right? So we need to make rates and insurance account. So it's a combined expense account. Let's make it rates and insurance account. Since both are expenses, so the concept of prepaid, owing and prepaid will remain same. Now read the question. On 1 August 2017, 2 months rates $800 were outstanding. 2 months rates were outstanding means it was owing. So 2017 1 August, here we write down balance, which is brought down. The amount is $800. Okay, so this was outstanding means owing, and this belongs to rates, RATES, rates. Okay, all right, next we have 3 months insurance $570 was prepaid. So prepaid, we write it here, 2017 1 August, we write down balance that has been brought down $570 for 3 months insurance. Okay, during the year ended 31st July 2018, the following payments were made by check. So on September 1, one check was paid. The amount of the check was, so bank, we write down, the amount of the check was 5200 and it was for rates, right? Similarly, this was for insurance. Let me write down insurance. Okay, so again November 1, another payment is made. November 1, here also we write down bank, and with bank we write down insurance, right? With what is the amount is 3400. Now you see, we have written the amount that has been paid. Let us check if there is any prepaid or outstanding. Okay, see, rates for 13 months to 13 June 2028 has been paid here. Rates for how many months? 13 months. If you look into the date, you will see it is till 30th of June 2018, but our accounting period ends on when? It ends on 31st of July. So we have 1 month of what? We have 1 month of rates that is still owed, that is still accrued. So closing, if there is any owed, here we write down 31st July 2018, write down as balance. Okay, owed will come here, POOP. Yes, so balance, this is CD. What is 1 month's rate? It is $400. Mind you, how I got $400? 5200 was for 13 months, therefore for 1 month what is it going to be? So 13 into 4, it is going to be $400. Okay, we did it like this. Okay, so this is balance CD. This balance is for rates. Next, we also have insurance up to how many months? 12 months, that has been paid till 31st of October. Now year ends on 31st of July. Yes, August, September, and then October. That means 3 months insurance is prepaid, and you know that prepaid is written on the credit side. Closing prepaid comes here, POONP. So here we write down 31st of July 2018, write it as balance CD. Okay, this is for insurance. What is the amount of insurance for 3 months? It is, suppose for 2 months it was 3 4. Wait, there is a catch. On 31st July, it was found out that 1000 in the insurance paid on 1 November related to Sarah's private house. So you write down 31st July 2018. We are going to write it down as drawings as how much? 1000. Now the net pay will reduce. It was paid 3400. 1000 drawings has been reduced. So net amount that has been paid is how much? 2400. We have to find the amount of prepaid insurance also. So insurance was paid for how many months? 12 months, so it is 3400. It is 3400 minus 1000, because 1000 became drawings, right? It was 2400 for how many months? It was for 12 months. 12 months up till October, but we know it will be August, September, October. We need for 3 months, right? 3. So 12 into 2 is 24, 200. 200 into 3 is $600. So here balance CD on the credit side of prepaid, we write $600. Okay, now you see if there is something left or no. So we have treated all these items. Yes, this is gone, 5200, 3400, and lastly $1000 for drawings has been put. Okay, now you see how we balance up this one combined expenses account. First, total both the sides. Okay, so this is 5200 plus 3400 plus 400 plus 570. 570 plus 5200 plus 3400 plus 400 is 9570. We write down 9570. This side also we write down 9570. So the gap that we are talking about is nothing but the amount that will be transferred to the income statement, right? I'm bringing the balance little down so that we get space here. Okay, so this is on 31 July again 2018. This is nothing but income statement. What is the amount that will go to the income statement? Total amount we write here. So it is 9570 minus 1000 minus 600 minus 800 will be 7170. $7,170 is the total amount that will go to income statement. Now mind you, this 7170 has two things in it. One is for rates and another is for insurance. Now you need to individually find out what is the amount for rates and what is the amount for insurance, while the total outside is 7170. So for insurance, you see what are the insurance amount that is given to you. Insurance, yes. And again, if we have any insurance, yes, we have it here, this one. Anything extra? No, nothing extra. So this is 570 plus 3400 minus 600. 570 plus 3400 minus 600. It gives 3370. It gives $3,370. Well, it is not 3370. We have missed one important point. Insurance. This is also insurance, I believe, but this drawings was also deducted from insurance, right? So add all this. 570 plus 3400 minus 1000 minus 6000. So 570 plus 3400 minus 600 minus 1000 gives you 2370. So insurance income statement is $2370. Whereas for rates, now we are going to calculate rates. You say this one for rates, you say this one for rates, you also say this for rates, and you also say, well, no, nothing extra. So 5200 plus 400, what is the amount? 5200 plus $400 is 5600 less 800 will give you 4800. So we write down under rates 4800. Now you add those. 4800 plus 2370, it's 7170, which means our answer is absolutely correct. Okay, so this is how we prepare combined expenses account. At last you bring down the balance. This will come here and this will come there. Okay, bring the balances down. This is our final answer.